First question, just wanted to see where your cash balance was as an indicator for your overall level of bullishness or bearishness. Is it towards the highs or lows of the range it's been in during the course of this year?
Yeah, it's still pretty high. It's above 10% of our portfolio right now. And, it's been a lot higher than that. But we also have more shorts than we have longs in the portfolio again, after we had covered a lot of them, when the market was down 12% intraday. And I think you actually had me on that day talking about what we were doing. But in general, what we do is, our big picture is we think the S&P is down 20% this year, driven by inflation and a more aggressive Fed. We cover when, a good portion of our 17 technical indicators are indicating oversold, figuring you get a 70 to 80% bounce back of whatever you lost. And then we put those shorts back on. So that's the tactical as well as the long term and how we manage our cash and our short positions.
And in terms of oil, which, you joined us at the end of last year to say was one of your top picks for the year ahead. Where's your thinking on that, given perhaps the geopolitical premium that might be built into it at the moment?
Yeah, right now we've actually trimmed our oil position. We pretty much don't have a position in it right now because, to your point, oil's run up a lot. A lot of that's fundamental, but there's some of it built into if Russia invades the Ukraine, which I think will probably happen. It could pop more. The interesting thing, though, is if you go back in time and look at it, one of the times they invaded, I think it was when they invaded Georgia in 2008, oil actually went down. So, each time is a little bit different, but at these levels, we were happy to take some of our profits. But at the same time, we also cranked up our shorts as well, when the market had been ripping and sort of discounting, inflation's fine, don't worry about it. Russia's fine, don't worry about it. We were like, okay, fine, we're happy to short more stocks at those levels.
What have you done, Dan, with your Meta stake? That was one of your top picks, I believe. Tough quarter. Stock is now more than 40% off the highs.
Yeah, we tweeted about that, the day after they reported and said, look, we got out. We had an interview with, on CNBC saying we took our beating at 250, got rid of it in the aftermarket when we saw them mention competition, which for us, TikTok's been around since 2017 in its current form when they bought Musical.ly. That hasn't really been mentioned as a risk before. And so when we saw that in the press release, mention of competition, we're like, okay, that's brand new. Don't want any part of this. We got out and, we're happy that we did because it's gone a lot lower since then.
What about some of the other mega cap tech names that, on the flip side, reported rather strong quarters, whether we're talking Apple, Amazon, Google? Have you been drawn back into those at all?
I guess drawn back in is potentially the wrong word. What we like is we like the names like Google that did well, which, it looks even better when compared to a Facebook, for example. And quite honestly, you saw a lot of other names report results that were pretty solid, especially given they're in the same space as Facebook, like Snapchat, for example, right? Because Snapchat theoretically is affected more by TikTok than Facebook should be, but, they didn't have any problems. So, what we're drawn back more into is bigger picture investment themes. So telecom, datacom, data center, all three of those have investment cycles going on at the same time. So we bought some momentum after they reported and the stock got hit for 14%. Because they're going to provide chips into all of those sectors. And that's a long multi-year theme that you should see playing out. Cisco is another one we're looking at. We don't own it right now because we got rid of that name because we're concerned about supply chain issues. And if they have supply chain issues like a lot of other companies have seen and the stock gets hit, despite strong demand, all the companies that have had supply chain problems have said, hey, demand's great, but we have these issues. The stocks have all gotten slaughtered. This is not like last year when people forgave you for about anything and said, yeah, the future will be great. Cisco's another one that we would be looking at. So those are the names we're being drawn back into.